Good morning, this is Robin Bieber on Chart Talk on the 16th of June at 6:55 in the morning, London time. The chart in front of us is RBOB, first line continuation, and yesterday it was the most important contract on the board, and we'll deal with that in just a second. The contracts breached, in most cases, initial supports yesterday and showed some weakness around about this time. Meanwhile, RBOB, first line continuation, dropped to its 21-day moving average, held, and that triggered the rally. The rally was credible but not conclusive. We've still got to navigate the short-term moving averages on most contracts. Heat and gas oil are both above their short-term moving averages, which are the 5, 8 and 13s, but heat and gas oil rarely lead the complex anywhere. With RBOB and the crudes, different matter. Now, if we just look at this chart in front of us, this was the key yesterday morning, this little turquoise line here. This was the 21-day moving average, and it held beautifully. And from that point here, the market rallied, and it rallied to close it up into the teeth of the short-term moving averages. And here you've got July RBOB right in amongst its short-term moving averages. It closed just over the 5-day, or around about, actually 1 point over the 5-day yesterday, but below the 8. Now here, this 8-day moving average is the most important resistance on the board today. If we move over 117.58, it's a thumbs up to more recovery and probably a retest of the high of 124.44. In other words, it's flagging some upside. But the crudes have also got this minefield danger zone of short-term moving average resistances, which we'll come into in a minute. Bottom line here is if RBOB can safely navigate 117.58, and its high so far has been 117.65, then it's got some upside that'll be contagious for the rest. It will be joining heat and gas oil in their move above the short-term moving average, and Bob's your uncle, we're likely to go up because it will drag the crudes over the short-term moving average resistances. So let's have a look at the crudes. WTI. July WTI, here we are. It's running into a minefield of resistance between 37.35 and 37.88. There's the 5 and the 13s at 37.35 and the 8 at 37.88. It needs, like RBOB, to take out its 8-day to give it some run up to the 40.11 level. Still got a negative stochastic, that's fine. It must not, in the meantime, close below the bull-bear pivot, which is the 50% correction point of yesterday's move, at 35.81. Brent is similar, breached but then moved over its 21-day and is now right in this spaghetti junction of moving average, short-term moving averages. Difficult to see in amongst that lot, but basically between 39.66 and 85, it's got the 5 and 13-day moving average, and so it's in amongst that area right now, and it needs to move and close over 40.33, the 8-day moving average, to give it upside to 41.89. In other words, it's got to take out these short-term moving averages. In the meantime, it must not move back below the bull-bear pivot at 38.57, or even worse, the 21-day moving averages between 38.36 and 38.04, this little turquoise line here. This is the danger zone, and this is what both the crudes are testing now, their short-term moving averages. And the market's going nowhere north unless it can get over the short-term moving averages on the crude and the 8-day on RBOB. Now, heating oil is just above the short-term moving averages, and if it can move over 113.84, which it's trying to do at the moment, it's likely to head for 115.35, this zone here. It's doing well, but heating oil almost never leads the complex. And nor does gas oil, which is also doing well, the right-hand chart. It's above the short-term moving averages. Looks like heading for 345.50, the 100-day, 343.50, yeah, the 100-day moving average. So it's getting some upside. The message is clear. Good recovery yesterday from the 21-day moving average. This is textbook. But now we need to move and close over the short-term, or the remnants of the short-term moving average resistances on both the crudes and RBOB in order to turn this recovery into a good, strong rally and higher numbers. But the jury is out so far on that. And our best guide to that is what RBOB does at around 117.55, the 8-day moving average. And if we look at a bit of a back-end structure, deck red deck, TI, mirror image of what's going on flat price. Short-term moving averages above the market, needs to get over 204 to give it a chance of running up to 188, which would be up to the 8-day moving average. It's got some work to do to be looking attractive. And the Decred deck on Brent has got to get over the 8-day at minus 281 to give it some real upside. Meanwhile, it's holding the 13 around minus 306 perfectly. That's all for today, folks. Good luck, good trading. Before we go, looking at the 60-minute chart. 60-minute chart here on Brent is beginning to suggest it's a little bit toppy, so don't be surprised by the odd cooling off dip this morning. And RBOB, yeah, it's recovering well. A dip early this morning is not by no means guaranteed, but having put on so much value yesterday from the lows, don't be surprised by the odd pullback. But on balance, this market looks like it's going to test its short-term moving averages on the crude and on RBOB at around 117.55. That's all for today, folks. Good luck, good trading, and bon appetit.